Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, November 26th, 2025, and here is everything you need to know as the markets open for today. Let's start with how Wall Street wrapped up yesterday. On Tuesday, US markets staged a solid comeback after initial weakness, with the Dow Jones adding 664 points or 1.4% to close at 46,448. The S&P 500 climbed 0.9% to finish at 6,765, and the Nasdaq advanced 0.7% to 22,872. The session was driven by major gains in artificial intelligence and semiconductor stocks, along with dovish commentary from Federal Reserve officials that reinforced market expectations for a December rate cut. Among the big movers, Alphabet was the standout winner, jumping 1.6% after announcing a significant breakthrough in its quantum computing efforts, while Broadcom surged 11.1% and Micron climbed 8%, riding the AI momentum. On the flip side, Nvidia took a hit, declining 2.6% amid reports of growing competition in the AI semiconductor space. Now let's turn our attention to how Indian American depository receipts performed overnight. Infosys ADR edged up slightly with a gain of 0.06%. ICICI Bank ADR moved higher by 0.20%. HDFC Bank ADR faced some pressure, declining 0.55%. Reliance Industries GDR, on the other hand, showed strength, climbing 0.67%. Overall, the ADR movements reflect mixed sentiment for Indian IT and financial stocks in overseas trading. Moving to Asian markets and GIFT Nifty, we're seeing some positive momentum building across the region. The Hang Seng Index is currently up by 0.8%. Japan's Nikkei continues its steady performance with a stellar gain of 2% at 48,659 levels. Turning to the all-important GIFT Nifty indicator, is up 1% or 275 points, suggesting a positive gap-up opening ahead for the domestic market after 3 consecutive sessions of selling pressure. This strength in GIFT Nifty and broad Asian recovery signals that Indian investors should prepare for a meaningful attempt at a recovery at today's open. On the global front, crude oil is shaping up to be a key factor for markets today. WTI crude closed Tuesday at $58.67 per barrel, down marginally 0.29%, while Brent crude fell to $61. The slight softness in energy prices reflects ongoing discussions around Russia-Ukraine peace negotiations, though geopolitical risks remain a backdrop. Gold has been particularly interesting, trading around $4,184 per troy ounce, with a modest gain of 0.03%. Silver has demonstrated stronger momentum, reaching $51.38 per ounce, holding gains as Federal Reserve rate cut expectations solidify. Now shifting to the Indian market front, the domestic setup is positioning itself for some interesting action today. Yesterday, the Nifty 50 closed at 25,884, down 74.7 points, or 0.29%, while the Sensex slipped 313.7 points to finish at 84,587. The benchmark indices have now posted losses for 3 consecutive sessions, raising questions about momentum. Technical analysts point to immediate resistance around the 26,000 mark for Nifty, with strong support established at 25,850. The volatility index of VIX has compressed meaningfully, suggesting that despite recent weakness, underlying anxiety remains contained. On the fundamental side, foreign portfolio investors or FPIs have turned out to be mixed contributors lately, remaining net sellers year to date, though some stabilization has begun. The RBI's accommodative stance with the repo rate at 5.5% continues to support sentiment, though the rupee movement against the dollar will be closely watched. Let's talk technical levels and trading setup. For the Nifty, today's immediate resistance on the upside sits at 26,033, with a secondary resistance zone at 26,100. On the downside, the critical support is 25,858, converging with the 20-day moving average and last week's low. A decisive close above 26,000 could trigger short covering and potentially propel the index toward 26,200. For Bank Nifty, resistance is around 59,170, while the support zone of 58,750 deserves close attention. Here's the tactical view for traders and investors today as we head into the session. With GIFT Nifty signaling a strong opening and Asian peers rallying, the smart approach would be to look for opportunities on any weakness in quality stocks rather than chasing strength immediately at the open. The 3-day selling spell has likely exhausted much of the downside pressure, making this a zone where calculated accumulation becomes interesting for patient investors. However, caution remains warranted given the ongoing FPI positioning and the need for Nifty to decisively move above 26,000. Sector-wise, IT and financial stocks deserve selective attention given overseas strength, while any weakness in defensive sectors could present entry points. Stay tuned for the evening wrap, and send in your questions and subscribe to this podcast to hear US every day.